A massive new trade deal just dropped between the US and India, and it is already shaking up the markets.
The big number you need to know? 18%. That's the new, much lower US tariff on Indian goods.
And the market's reaction? Well, JIF Nifty futures immediately exploded, jumping over 600 points.
Okay, so what's actually in this deal that has everyone talking? Let's break it all down. At its core, this deal is all about resetting the economic relationship between the two countries.
In exchange for those lower tariffs, India has made some really significant promises.
But the centerpiece is that tariff cut. We're talking a massive drop from a peak of 50%.
For investors, this is a huge shift, giving Indian exporters a serious competitive advantage almost overnight.
And just look how this stacks up against the competition. This is a game changer.
This move makes Indian products a whole lot more attractive in the giant US market. Financial experts are already saying this could be a huge magnet for foreign investment into India.
So, if you're investing, these are the key sectors that could really benefit from this new deal.
But believe me, this deal didn't just appear out of thin air. It was a really rocky road to get here.
You can just see how things escalated over the last year before this sudden U-turn.
So, is everybody happy about this? Not exactly. The reactions are pretty split, to be honest. On one side, Indian officials are hailing this as a truly historic landmark moment, a total win. But some US business groups are saying, wait a minute, this is still a massive tax hike for us. And here's a key point. Experts are warning that the fine print, the legal text, isn't even finished yet.
Which brings us to the really important question. What are the hurdles to actually making this happen?
For starters, replacing Russian oil is going to be a massive, massive challenge for India.
So is this a real turning point, or will the challenges be too big? For investors, that's the big question.